Good morning. It's December 3rd. It's 8:46 a.m. Eastern Time. No video update today. This is an audio version of the morning brief of the U.S. stock market. Okay, the level 4 swing was up as anticipated yesterday. It's due to top out 1 p.m. and later today Eastern Time. It does not have to top out to about the end of the overnight session. Perhaps it could extend in the start of the day session tomorrow, but more likely it will top out during the overnight session, the latest. So I have my fingers crossed that there's more upside here today. And the reason I say that is that I'm concerned yesterday's upside momentum really wasn't all that well, and I'm puzzled why they're just sitting here overnight, not really doing much of anything. I hope we're not losing momentum, okay? I really want this market to take out the high of this week as well as the high recently. I want to see punching through a record high here fairly soon. Any kind of stalling out would concern me. We could have a last-minute breakdown for a bottom that ought to show up no later than the week of December 14th. It'll probably show up ahead of the Electoral College vote. I have no idea whether politics could come back to headlines to worry the market or not. Is there going to be some kind of coup going on with the Electoral College? If so, that's probably going to be the death of the Electoral College. But at any rate, I think the market should be not paying any attention to those kind of politics. It should be watching the stimulus, which has moved back onto the list here. And it's interesting, the market would have gone higher in the January without any stimulus, but the fact that we're debating over stimulus kind of encourages the market, and therefore it kind of overreacts when it looks like we're not going to get the stimulus, that they will sell. And that's kind of odd in the sense that even if we weren't discussing stimulus, they wouldn't sell. So why do they sell? Because we're discussing stimulus and it doesn't work. Yesterday, CNBC said a poll showed something like 85% of CEOs favor yet another stimulus package, and I hope that Congress is aware of that. All right. So now that they're talking this, I hope they follow through and actually do something soon, and that could cause a surge of demand in the stock market and give us this breakout for the record high. So bottom line is, I think this market's heading higher in January, no matter what, but there's no question we have to keep an eye on the virus, some of the politics, and the stimulus. Other than that, I think most of the economic indicators are looking good. Yes, some of the high-frequency stuff is rolling over, showing an impact by the virus. Some of the unemployment numbers don't necessarily look that great. But overall, it looks like we're in a long-term bull market and long-term growth for the economy, and I want to continue to follow through with that. So if we see violation of 3440 in the December futures anytime today, this week, I would be concerned this market is stalling out, and it also opens the door. Maybe we could see a last-minute pullback for a more picture-looking type level 2 trend. In other words, something we can see on our chart visually and meet some of the normal statistics. But as I've stated in recent days, it feels like we're actually in a running correction when the market slows its pace of moving higher, and that's all the respect it gives you for this level 2 period of time when the market should pull back. It just simply refuses to pull back, but it can't really speed higher. But once that level 2 is in place, and I think maybe it is in place, but unfortunately I have to give it at least through next week anyways, to cause a pullback and be put in place. But once it is in place, if it's truly a running correction, there should be a speeding higher of the stock market out of any kind of running correction. So I still think we have net demand here and not enough supply. But is there something that could scare people to suddenly sell something that they weren't really originally planning on? Okay, so as always, there's risk, there's headwinds, there's always something bearish on our list. Okay, but I think the bias is still bullish positive. I want to give the bulls a chance here. Again, violation of 3440 will cause somewhat of concern that it's going to take more time here. And let me double check on that 34. That sounds awfully low to me. If you look at your daily chart, you can see it's hesitating near the high of this week, and if we can just punch to a new high, I still think looking out over the next couple of weeks or something, we have an opportunity for 3,700 to 3,750, even for the cash index. And while I'm looking up that intraday chart, I also want to mention that I discussed the SSO fund had a gap up, and I said that would be the same for the cash S&P 500. And what I came up with is that it looks to me like they pulled it back and filled enough of that gap. Some of them would say it was filled because it pulled it back to a prior day's high. It just didn't go down to a prior close for picture perfect filling the gap. And then they bought it. So I think it's enough. I think this market wants to move higher. I just would have liked to have seen a little more perkiness overnight. They definitely are hesitating, looking over their shoulder, questioning where to go. Okay, let me get you that more refined number here. Yeah, actually, it looks like I don't want to see violation of 3640 would be a bit of a caution flag. We have some complications. A violation of, what's the low here? It is 3592 and a quarter, basically a violation of 3600 in the futures and cash. Would be a warning sign something's wrong, that it is pulling back for something like what we would anticipate for a level 2 dip. Whereas at the moment, I'm kind of betting against my own model here that really the dip just isn't going to work. We're in a running correction, and at any moment, the market's going to speed higher to signal that we've seen the level 2 bottom that did nothing more than slow down the pace of the market. Hopefully this makes some sense to you. Again, I think overall just focus on the idea this market ought to go higher into January, and maybe it's in January when we're going to get more concerned of, are the vaccinations coming fast enough? Where are the present number of cases? What's the present impact? And then, of course, some of the data always takes a while to show up and be confirmed and be official. It may take to January to actually see that we are in a slump now in terms of the economy. So I don't want to ignore the coming top in January. I think we'll get some kind of setback January, February for the next long-term incremental buy, as well as one of the more important intra-year trading buys, trading opportunities. But for the moment, I think this market should work higher into January. But again, I would appreciate a little more rounded demand here in the next few days. Would like to see that stimulus package come through, come to fruition, and be over and done with, and get another round of demand here. Manage your risk well, as others. Have a great day. Thank you.